Okay, I'm officially being recorded.
There you
Uh,
go.
there you go. Cool.
We have 7 students with us today. We're missing a
Awesome.
couple, but I told them to take a break. While I got set up. We weren't sure how this was going to work. We're in a completely different building than we were the last time. We
Yeah,
still,
I was gonna say the classroom looks very different from last time I presented.
we're
So,
up north now at Northridge up by Lamplight Village.
oh, sorry, Stacy, I can't really hear you when you're
Ah,
far away. Do you have a microphone that you can pass? Because also, and everyone else can hear me quite all right, right, guys? Can I get a thumbs up if you guys hear me okay?
yes.
Awesome. Thank you, people in the back and the front. Just so you know, I'm not gonna like this lecture is not a lecture, it's a conversation. So it's really gonna be you're gonna get out of it what you put into it. I'm not gonna talk at you guys or anything like that. I want to know what questions you have, and I'm just gonna be a resource for you and try to, help you through everything. So again, I do not have a presentation, but I do have, 10 years of experience in public accounting and a passion for this stuff. So really, it's going to be whatever you guys want to talk about is what we're going to talk about.
I don't think I have any audio settings, so I may just have to be up here to speak the
Speak on behalf of everyone. Okay.
half. Let's see.
Or you guys can just scream at the top of your lungs at the computer, you know,
Pretty loud person.
whatever you prefer.
I do it in like 80s.
Okay.
Nope,
So
he can't hear you.
what's up?
Nope, they were trying to see if you could hear them, but you can't. So I will.
Yeah, unfortunately I can't. Yeah, unfortunately I can't. Honestly, if you guys are okay with it, not to make people feel uncomfortable, but would you be open to actually coming up to the screen and talking so I can hear your voice and we can actually talk to each other? That way, it's not just me and Stacy talking the whole time. You guys get to have a little fun and actually interact.
You want
Does
to
that sound
come
like a good idea?
move up a little? I don't know.
Okay. Well, okay. Again, the
I
goal of
don't
this
have
is,
another speaker with me, unfortunately.
yeah, no, no, no worries. So again, if any of you guys have a question, feel free, I guess, to come up to the class and at the computer, just speak your question to me at the computer so I can hear you. But yeah, so I'm just gonna kind of jump into what I do, what I've seen, and really, again, I don't want to talk for more than 5 minutes at the most before I start fielding questions from you guys. Okay? So I don't know what Stacy told you about me, but my name's Aaron. I'm a CPA. I'm originally from New Jersey, and I moved to Austin a year and a half ago. For the past 10 years, I've been working at a top firm in Manhattan, working on clients of up to $200 to $300 million in revenue. 5 years ago, I started building out my own little side hustle, doing tax returns on the side, and that's grown to a point where I decided to quit my job and start my own firm with a partner of mine, and we're actually acquiring a firm out in the Austin area. So I've seen business situations from, a simple side hustle, someone has, a regular job and doing a side hustle like I did, up to, multinational companies with huge amounts of sales and everything in between. I think really the goal today is to kind of set you guys on your path if you do want to be entrepreneurial and start your own business, and let you know about what to think through and about kind of what type of entities exist and what to do as a business owner. Because I'll say this too, a lot of people may have a passion for something, but they don't like the nitty gritty. They don't like the numbers. And if that's the case, there's nothing wrong with that, but you should get a job. You should not be a business owner. Or you pay someone to do that for you. Either way, you got to take ownership of that. And to that end, the reason I'm saying that you have to take ownership of that kind of concept is I'm actually working on a client right now who had a business manager who stole hundreds of thousands of dollars from his business. And he had no idea because he wasn't looking at anything. So if you guys are either a manager for a company or have your own company, you need to be aware of the goings ons and understand, hey, listen, what should the budget be? What should my revenue and bottom line actually look like? You don't have to, especially if you hire someone, you don't necessarily have to be doing everything, but you have to take ownership of it. So again, forgetting like there's two really schools when it comes to accounting. There's the tax side and the actual business operations side. From the tax side, that's where entity formation comes in, doing estimated tax payments. Do I form an LLC or an S corp? And frankly, I'm just spoon feeding you guys questions to ask me later. So again, I'm going to stop talking in a minute, and I'm going to let you guys ask me questions. There are no stupid questions, especially when it comes to this stuff. And there are people that have $1 million plus companies that don't know what's going on. So there is no such thing as I'm too ignorant to ask a simple question. So again, one school of thought is the tax side, and again, the other school is the operational side. Understanding, hey, am I actually keeping track of my receipts and records properly? Or should I potentially do this form of work? A lot of people, especially business owners and small business owners, chase revenue, but that revenue may not be profitable. For example, what if you have a customer that's like, hey, listen, I'm going to give you $1,000 a week, but it's going to take you 50 hours to take care of that work. If you're on a one-track mind, you're going, that's a lot of money coming in on a weekly basis. That sounds great. But then you look at it, that's 50 hours of your time that you're spending up. Is there an opportunity cost here? And a lot of people don't necessarily think about that. They don't look at it from a profitability perspective. So honestly, that's my spiel. Like that's what I do. I like this stuff. I am a nerd. And I like to talk to people. So please, you guys, like again, this is gonna be whatever you want it to be. You want it to be okay, that's it, and I'll log off right now. I can do that. Or if you guys have questions, again, I like having more of a conversational discussion as opposed to just speaking at you. So please, if everyone has questions, let's go into it, right?
Well, we reviewed a couple of chapters in the book, so hopefully people have questions. I have my first question,
Yeah.
and that is, I am a solo practitioner. I used to have a business where I had a location and I had other therapists working for me, and I used a payroll service and all that stuff. But my life has changed, and now I'm a solo practitioner at home. Should I still be using my corporate entity, or would it be better if I go back to a DBA? And what is the difference between those?
So that's actually more of a legal situation as opposed to a tax situation. A lot of people think that they have to form an LLC or form a business in order to take tax write-offs. But if you are earning income by doing business operations, for example, myself, before I formed the company that I did this year, I was just operating as Aaron Holtzman CPA and I was doing tax returns on the side. I did not even do a DBA because my name is Aaron Holtzman and I'm a CPA. So when I would have tax return filing costs or insurance expenses or subscriptions for software, I would expense that. And I didn't even have to form an LLC or anything. The purpose of forming an LLC or an entity is potentially a tax play if you form an S corporation, or at least a liability play for an LLC. Again, the liability play being for an LLC being that you have the business, God forbid something happens there, there's something called a corporate veil. And the goal is to not have that veil pierced. So if something happens on the business side, it can't come after you personally. If you're not incorporated, that could potentially happen. Now, for me personally, due to my ethical requirements as a CPA and the fact that I have insurance, I didn't deem having a corporation for myself personally as that necessary because I had insurance to cover my situation. And really, if had gross negligence or anything like that, that would pierce the corporate veil anyway, and I'd be on the hook personally. So really, I'm forming this business entity now because it's not just me owning it. It's going to be another partner owning it, and we're forming an S corporation in order to get to be tax advantageous to us. But again, doing a DBA or an LLC that is wholly owned by you, it's going to be the same tax form. It's really just a legal concept.
Zoe, is there a question?
Oh, no, I was just surprised because my wife and I were debating this over the weekend, and I honestly thought the liability protection against, having your personal assets come after in a legal situation would be worth the added effort of filing for the LLC. That's what my wife did when she.
Okay, slow down a little. Because I have to,
Can you, hey,
Zoe
can you
is
come up
actually
and-
blind.
can you
It's a
come up
little
to the computer,
difficult.
if that's okay?
It's a little difficult for Zoe
I can
to,
get to the computer, that's no problem.
well, okay, it's just gonna take a minute.
Yeah, that's fine.
No, I'll be really fast, don't worry, I'll go straight through. Run through all the tables. Table. Thanks, Shannon, I appreciate that.
Thanks for letting me know there was a table there.
Yeah.
Too late.
She's
All
got my
right,
badge.
so stop where you are. And I want you to move to your right until you feel the table there. There you go. So
Hello.
now you're at the front of the room, and if you, now you're facing me, so if you
What is the correct angle to face
to face the
room I'm with?
computer, you want. I have to get there so I can tell you.
But all right,
All right, so you're gonna turn to the left,
how many degrees?
30 degrees.
That's great. I asked.
Hello. What's your name, by the way?
Hi there, my name is Zoe. It's a pleasure to meet you, by the way, and I really appreciate you taking time to come speak to us. I did have a few questions, but the first was
Yes.
inspired by Stacy's, which was in regard to an LLC. My wife and I were debating this over the weekend because that's the kind of discussions we have, and she felt that the LLC was worthwhile to set up because in her own experience as a small business owner, her experience was getting the LLC felt worth it to protect the personal assets and, like you said, from keeping the corporate veil from being pierced. Do you feel like, as independent business people, in our case as massage therapists, do you feel that our insurance is enough on its own to keep our veil, as it were, sufficiently pierce proof, or do you think it's worthwhile to consider the LLC in our situation?
So, firstly, Zoe, thank you for coming up and asking that question. And you may hear this a lot when you speak with professionals, but my immediate response to your question is speak to an attorney, especially when it comes to liability and potential litigation. But to that end, I see if you're forming an LLC, you're just being extra protected as opposed to not having an LLC.
Mhm.
So, regarding what your wife was telling you, yes, absolutely, that would make total sense.
Mhm.
Again, having insurance is also paramount in what you're doing. But again, having that corporate veil there would be beneficial 9 times out of 10. Again, for me personally, being a CPA, I'm not meeting people in person, so I can't do physical, God forbid, physical harm. Not saying any of you would ever purposely do that, but maybe, I don't know, you slip and fall and take someone with you, or so things can happen. In my case, it was very much what we call errors and omissions. And I actually have specific insurance called errors and omissions insurance. And that means I added something up incorrectly, not what I would call negligence or gross negligence or fraud. That kind of stuff almost always will pierce the corporate veil anyway. And again, my line of work is very different from what you guys are doing. So
That's kind
to
of
that,
curious.
so to that end, again, forming an LLC, while it may cost a little bit of money to set up, especially in the state of Texas, it's very simple to just file the Texas franchise tax return. It's literally almost a one pager informational tax return, no taxes owed. So
Yeah, my wife did it in like about 30 minutes one afternoon, honestly. Like
yeah,
that.
no, exactly. It's very, very simple to do. So there's no harm in doing it. It's just that some people will be like, oh, I get a lot of clients come to my door go, I did contractor work for this guy or girl, and like, hey, what can I deduct? And I say, well, what was your cost incurred to earn that revenue? You know?
Mhm.
So to that end, that's really what it is. So whether you're an LLC or just doing a DBA, if you have revenue coming in outside of a W-2, outside of
Mhm.
payroll, if you have expenses incurred, you can deduct it. But again,
Can
from
you?
a liability perspective, I would
Mhm.
always say defer to speak with an attorney.
Fair enough. And actually, that really checks out with my wife's general approach to things is better safe than sorry. So that
Absolutely.
scans kind of what she does. Can you deduct if you're creating an LLC like in Texas? Last time I checked, it was about 350 for
Yep.
filing.
Yep.
Is that a deductible cost?
Absolutely is. It is a lot. Yep.
Awesome.
That is definitely. And if you engage an attorney or you engage a CPA, all those professional fees are deductible as well.
So if we engage a CPA, that's deductible.
Yes.
That's fantastic. I
Yes.
feel like I should make some sort of proposal joke here, to engage a CPA. Well, if it's deductible, then while you're here,
So it's
I did
like-
have one other question. I'm sorry. Is that okay?
Yeah.
Or should we make space for other people to speak?
See
Thank
anybody
you.
with their hand raised.
Well, neither do I, but I just wanted to check. So my one other question was, in terms of handling taxes or bookkeeping or anything for businesses, especially people who want to be independent business owners like ourselves, something unique to my situation, of course, being my blindness, what would you recommend? Have you worked with or have you dealt with any clients who do have disabilities, such as in my case, blindness? And if so, do you know of any recommendations, any unique recommendations, like particularly accessible software for bookkeeping that interfaces well with that, which can be conveyed
That's
to an accountant or anything like that, accessible accountants who make sure their services are rendered in ways that are disabled friendly? Like, what's your experience with that?
so that's actually a really good and interesting question. I've actually never been asked that question before.
That's both exciting and sad at the same time.
Yeah, I know, I know. As I'm giving an answer, I'm like, yeah. So,
Like, awesome. Oh.
I will say from my experience, I'm not aware of any tax softwares or bookkeeping softwares that would be friendly to those that are unable to see, that have blindness. Um, I just don't know. I mean, I could do a Google search, but just in my experience, I've never seen something like that, a product specifically built for that, or
That's a-
existing products that have, like QuickBooks is a very typical accounting software. I've never
Yeah.
seen anything like that. But to
Yeah,
that
it doesn't.
end,
I did try QuickBooks with my screen reader on an iOS and also, or on a Mac OS and also Windows iteration, and like both of them, something about the programming, the something about the code, they don't interface with the screen reader very well.
yeah. Yeah, I was gonna say, I mean, if that were able to work, that would be amazing. So to that end, honestly, what I would say best practices would likely be, you have a bookkeeper working for you, but going back to what I was mentioning earlier for proper, you know, management, governance and understanding your business, you can either have a financial package prepared on a monthly basis by your bookkeeper and provided to you and your wife, and the two of you guys can review it, and she can read your numbers to you. Either that, or they can get printed out, and you can read that as well. But you at least have a report of the information, and you can say, yeah, that sounds right to me. This revenue, yeah, I did earn $10,000 last month, and I did spend $2,000 on rent or something like that.
Kind of working with her to ensure, or working with her or whomever I enlist to ensure consistency in the numbers on like
Exactly.
in that way. Okay, that's very good advice. Thank you so much. That was really something I was hoping to pick your brain about, and I really appreciate you making time for all of us and for my unique battery of questions. Thank you so much.
Not a problem. Thank you for asking them. I mean, these were good questions.
Well, if there's one thing I'm good at, it's talking. So
Here we go. Me too.
Well, actually, she's also an amazing programmer, and there's a need out there, but she's going to be busy taking care of people, so she's not going to be able to create that program that's so needed for that population.
Yeah.
All right, Cheyenne is coming up.
Okay. Cheyenne,
Yes,
hello. How are you?
I'm good. I wanted to know like what all in our personal business could be considered like a write-off or a tax deductible.
Yeah. So my rule of thumb for this kind of stuff is, would you have spent money on this if you weren't conducting your business? Okay. So, for example, if you guys, had to go buy, I don't know if you want to offer coffee, tea, water, seltzer to your customers in the waiting area of your potential practice. You need paper, you need XYZ, anything like that. I would argue, those are straightforward business expenses. If you didn't have your business, you would have never spent that money. There is also kind of a gray area going, oh, well, do you take phone calls from work on your cell phone? And if the answer is yes, then either you can piecemeal it or expense the entirety of your phone bill, things like that. So you go into, there are like really three buckets. The first bucket is, yes, we would have incurred this cost no matter what. Then there's a bucket of we're incurring this cost no matter what, but it also has a business function. And then the third bucket is we would have never incurred these costs if it weren't for the business. Okay. So for example, if you guys have a dog, you're buying dog food. That would fall into the first bucket. You're incurring those costs no matter what, and it has nothing to do with your business. The second bucket could be your phone. Again, you would be incurring those costs, but now you're using it for a business function. And so that's where the gray area comes in going, okay, what's going on there? And then the third bucket again is coffee, tea, what have you. You would only buy this stuff for the business.
Okay.
So really it's just, if you're working with a CPA or what have you, just say, hey, listen, I'm incurring these costs. I've worked with, a lot of people across many different industries, and I'll never forget, I was working with a chiropractor and he had a laundry expense. And I said, well, you can't write off your personal laundry. He said, no. These are for all the towels I use and all that kind of stuff during my sessions. And I said, okay, in that case, that's totally fine. To the extent even that I've worked with people in particular industries where things that may be personal expenses for other people would not be applicable. But like, again, general rules of thumb are, what is the nature of this expense, And as long as you stick to those rules of thumb, you'll very likely never run afoul of anything. And again, it's never a bad question. Just ask your accountant, hey, listen, is this deductible? Doesn't hurt to ask that.
And that includes things like, for instance, a parking garage.
Yep.
I went to a seminar for my business, and so I paid a parking garage fee, and so that now
Coffee. You got a coffee on your way to the seminar. I would say that is a meal. You can write that off. Okay. So what I'm saying is anything. Now, if you're like, I went to a seminar and then I went to, what is it, Perry's, right? The steakhouse or something like that. And I got myself a nice big steak. Well, I don't know about that. You know what I mean? But if you're like, you swing by a Starbucks on the way to a seminar or something like that, or you go to Schlotsky's and get yourself a sandwich, like, again, as long as it's in relation to you performing work or pushing forward in your professional development, the seminar itself is a tax write-off. That's a professional development seminar. So things like that. Again, if you
I
weren't,
have a
yes.
caveat and a little bit of a devil's advocate here.
Yeah.
At the end of the seminar, I took my seminar teacher out for a steak dinner to pick and to learn more.
In that case, I would say that that's okay.
Okay.
Again, now if you took them out for a steak dinner and you guys spent $5,000 because you decided to go buy the most expensive champagne drink and what have you, then we're now into more of a gray area again, But again, it's all within reason. Would a rational person do this? And again, to that end, I had clients, the client that I'm talking about that had the fraud going on, this individual did a lot of traveling, but the business is based in Texas. So unless it was some sort of corporate retreat they were going on, that's fraud, and that wouldn't be a write-off, If you guys are like, oh, I'm traveling to New Jersey to visit my family, I'm going to write that off. That doesn't work. But if you're going to New Jersey to go to a seminar or something like that, then that's a write-off.
So we could essentially put our our continuing education courses as a
Exactly. Yep. Continuing education courses are absolutely tax deductible.
That is helping you do your business.
Yep.
So you're working on your business. Okay.
Even licensing, if you guys have to get professional licenses and renew your license on an annual or however frequent basis, that's a write-off. Again, being a CPA, I'm a member of the AICPA, that costs money and I pay that, and that's a write-off. I'm a member of the state board. And again, that costs money annually, and that's a write-off. And then I have my own CPE classes, continuous professional education classes. All of this I would not be doing if I wasn't existing in my field. If I retired, all this stuff would go away. Or if I changed professions, all that stuff would go away.
Thank you.
Yeah.
Any other questions, Cheyenne? I don't think so.
Yeah.
Is there a
Those are
place,
good questions. Keep them coming, guys. Wow.
is there a place where we could get a list of common tax deductible items that a business might have?
So actually, yes. To be honest, there's something called a Schedule C, and that is on your 1040. A 1040 is an individual tax return. And a Schedule C is for people that have their own business, that is not filing an entity tax return. And on that Schedule C, it has examples of buckets such as supplies, office expense, travel, literally on the tax form. And those are some examples of what it would be. But then, and additionally, for example, laundry, that's not going to be on a Schedule C. That would go on an attachment to it. So that's what I'm saying. That's a good place to start. But really, again, the rule of thumb, did you incur this cost to cover your business? There is one caveat to that I'm going to say really quick, and that is uniforms. If you guys buy uniforms that can be worn outside of work, they are not tax deductible. And what I mean by that is if I go and I buy myself a suit, obviously when I meet clients being suited up, that would be beneficial. And I could argue that I bought that suit for work. However, I can also wear that for any other occasion. So it's not a work exclusive thing. Scrubs, on the other hand, would be considered a uniform expense. So again, just something else to be aware of in that regards.
Good point. All right, we have Miss Lindsay. She has a question for you.
Hello, Lindsay.
Hi, yeah, I have, last year I started kind of like a small business side gig. I have a DBA, and I'm hoping to merge it with, I sell herbal products and I'm hoping to kind of merge it with my, massage business and, 'cause they kind of go hand in hand together. I don't have any employees except for sometimes my fiance helps me making products and stuff. So currently it's just a DBA for me. And I was wondering what kind of, I guess the benefits of, you mentioned you're starting an S Corp for the tax benefits. And I kind of wanted to learn a little bit more about what are the tax benefits of an S Corp.
Absolutely. So you actually brought up something that I want to just backpedal to real quick. Firstly, you don't have an employee, but your fiance is helping you out. But if and when you guys ever hire someone to help you, make sure you speak with an employment attorney.
Okay.
Because you need to have an employee handbook. You should make sure that you have a proper employment contract. And also you should be aware of whether or not they are an employee or a contractor. Because you can get into a lot of trouble if you're paying someone on a 1099 basis, as in just writing them a check, when in reality you should have been processing payroll for them. You can get in a lot of trouble with the Department of Labor and the Texas Workers Commission if you have been mislabeling employees. So again, I know that doesn't answer your question, but you jogged my memory, and that was something I just want to put out there. So when you guys, if and when you guys ever work with people, either an admin or someone who's going to be doing the work with you, make sure you cross that bridge properly. So now to answer your question about oh yes.
Could you explain a little bit the difference between like somebody who's an employee on payroll versus somebody who would be just a contractor?
Yeah. So firstly, actually, one other thing too. Best practice, do not give someone any money for services such as a CPA, or if they're contracting with you, until they give you a Form W-9. Because if you pay a contractor like an attorney or an accountant or even someone, a website developer who's an individual, if you pay them over $600 during the year, you have to issue them a Form 1099. And if you don't do that, you get hit with penalties. So Just be aware of that when it comes to engaging people to do professional services, what have you. Now, for the employer situation, a lot of people end up going with contractors, calling them contractors instead of properly calling them employees because it's easier. You don't have to register for employment tax or for payroll taxes anywhere. You don't have to file payroll tax returns. You don't have to file payroll. All you have to do is write the person a check and you're done. But so one is easier and less expensive because firstly there's compliance costs on processing payroll, but then also the employer has to pay half of FICA, which is Social Security and Medicare. So your costs are actually 7.65% higher because you're paying half of that and the employee pays the other half, and you have compliance costs of payroll. So what a lot of small business owners do is they do the easy way, which is just write the person a check. But that is not always the right way. So it's worth, if you're going to do it the right way. You know what I mean? And to that end, I had a client who had a contractor for 2 years. She was a small business. She was a designer, so she was trying to get a fashion line up and going. She had less than $1,000 in revenue over 2 years. She lost maybe $20,000-$30,000 a year for 2 years because she was paying this contractor and trying to build up the brand. Anyway, she even said, "Oh yeah, it's a contractor. I have a contractor agreement." Again, long story short, COVID happened. She told the contractor, "Hey, listen, I'm going to put the company on pause for right now." The contractor then went and applied for unemployment. Contractors aren't allowed to apply for unemployment. Only employees are. So the Department of Labor threw the book at her. Firstly, COVID didn't help because things got lost in the mail. She didn't check her post office box for months, so she was already late. But she was and this is also New York. So New York is likely a little more aggressive than Texas. But she had a $40,000 fine staring at her because she never did workers' compensation, never did unemployment insurance, she never did any payroll tax returns. Now, she was able to get that drastically reduced, but it was still at least $5,000, I believe, of penalties and interest. So what I'm saying is just, it's not worth it. You know what I mean? If you're going to do it right. And to her end, she actually hired an attorney to help her with the contractor agreement, but it didn't hold up. So if you're on the fence going, is this an employer or contractor? Just put them on payroll. You're never going to get in trouble.
There is also a way for us to know the difference between a contractor and an employee in our business. And that because we'll have people that will hire us to go somewhere and do something. The difference between whether or not we can be a contractor or an employee in that job situation is, do we have to wear a specific uniform, and do we have to follow a specific protocol, and do we have to do things in a specific way? That's an employee. As a contractor, they can't tell me what to do. They say, show up, do your job, and then we pay you. That's a contractor. Someone says, follow this system, do it this way, wear this uniform, present yourself this way, that's an employee.
And to that end, lawyer up. Okay? Speak with an attorney that specializes in this stuff. And again, to what Stacy just mentioned, I'm a contractor. If you guys engage me to do your tax return, you're going to go, here's my stuff. And then I'm going to do it, and I give it back to you. You're not telling me how to prepare your taxes. Okay? You're not telling me what software I need to use or anything like that. Okay? So that's the big difference. Again, if you guys are on the fence with anything like that, make sure you just understand what is going on. Okay? So now let's come back to your original question, which was why an S corp? So really, in the existence of the tax universe, there are for a simpler situation, there are 4 entities. There is the sole proprietorship, there is the partnership, there is the S corporation, and then there's the C corporation. Those are the 4. Okay? Now there's also LLCs. LLCs are just legal entities. And when you actually form an LLC, you elect to get taxed as a C Corp, an S Corp, or a partnership. So I'm going to table that for a second and just talk about these four things. One other thing, and I'm going to kind of jump around, but I'm trying to, show you how the puzzle works here. Are you guys familiar with the term double taxation?
No.
No. Okay. So you may hear people on Bloomberg or CNBC, the Wall Street Journal complain about double taxation. Well, double taxation is a company earns money and then the company pays corporate income taxes. And then when the company gives its money to shareholders, it's in the form of a dividend. And then shareholders have to pay taxes on the dividend. So that's literally where the phrase double taxation comes in. You get taxed on the corporate side, and then you get taxed on the money sent from the corporation to the owners. Okay? There's only one entity that applies to, and that is the C corporation. So from a tax perspective, it's almost always more advantageous to never do a C corporation. The only times I've seen corporations be used is for legal purposes or entity structuring purposes. A lot of companies that are traded on stock exchange, almost all of them are exclusively C corporations. Okay? So for small business owners, most of the time doing a C corporation is not the right way to go. The other three entities, S corporation, partnership, and sole proprietorship, are what is known in the tax world as flow-through entities. That means that, let's say you made $100,000 in profit on the corporation level. Under a C Corp, you would pay corporate taxes on that $100,000. And then when you take the money out of the C Corporation, you pay taxes. For flow-through entities, you make your $100,000. You do not take a dime out. You leave it all in the business. You have to pay taxes individually on $100,000. You take $100,000 out of that profit. You take it all personally. You pay taxes on $100,000. You take $50,000 out. You pay taxes on $100,000. That is the key when it comes to all the other entities. They are flow-through entities. Again, when I've worked with business owners, usually the ones that have had their taxes filed for a couple of years understand that concept. But especially your initial year or two or three, it takes some time to really just wrap your head around. So at the end of the day, what you need to know is whatever the company earns flows through to me or the owners personally. There's no double taxation, which is a benefit because you're not paying extra taxes. However, you have to make sure that you file it, include it on your personal income tax return. So that's the difference between the C Corp and then the S Corp, partnership, and sole proprietorship. So C Corp, we're going to throw that away now. We're done with it. Okay. So you guys don't need to know, like you guys likely would not form that entity. And again, you at least understand double taxation now. So now there's the partnership, the sole proprietorship, and the S corporation. Now, a sole proprietorship just goes on your Schedule C. That would merely just be on your Schedule C of your 1040. It goes on your personal tax return. There is not a business tax return to be filed. Maybe a franchise tax return in the state of Texas, but there's not a separate business tax return federally that needs to be filed. And what a lot of people will do sometimes is they'll form an LLC and elect for it to be taxed as a partnership. Now, a partnership means there's multiple partners. However, with an LLC, you can be what's known as a single member LLC, which is known as a disregarded entity and also would go on your Schedule C of your 1040. So there's two types of Schedule Cs. There's the DBA and then the LLC that is wholly owned by one individual. And that's why I was saying whether you're an LLC or an individual, you still get the same write-offs. It's the same tax form. It's just that one has that legal liability protection. So we're now done with the single member LLC and the individual. So the two entities left are the partnership and the S corporation. The partnership files a form 1065. An S corporation files form 1120S. So again, single member LLC, sole proprietorship forms Schedule C, which is a schedule on your 1040. LLC files a business tax return, a partnership business tax return called a 1065. S corporation files an S corporation business tax return called 1120S. And if you want to guess what a C corporation files, it's called a C corporation business tax return. It's Form 1120. No S, just Form 1120. So, I apologize. Now I feel like I'm lecturing here, but I promise I'm getting to the end. Okay. So, again, with a partnership, that implies multiple owners. And you get taxed on it the same way you would a single member LLC. You're just splitting up the income. An S corporation has kind of a tax advantage to it potentially. And let's go back to this $100,000 scenario for a second, right? Let's say your business made $100,000. If it was a single member LLC, or if it was a sole proprietorship, or if it was a partnership with two partners that each made $50,000, 100% of that income is subject to self-employment taxes. That is FICA, Social Security, and Medicare. If you remember, I was mentioning that's a cost for payroll for the employer. When you're self-employed or you get a 1099 as a contractor, you have to pay both the employer portion and the employee portion. So that's almost 15.5%. It's actually a little bit over than that. So the play with an S Corp is, let's say, and for simplicity's sake, you can be a single owner of an S Corp and you would still file an S Corp tax return. Let's say you made $100,000 on the S Corporation. If it was a single member LLC, whatever, you would pay, again, round numbers, about $15,000 of self-employment taxes. If you are an S Corporation, you can take a salary. And this comes into the realm of something called reasonable compensation. So again, you have net income of $100,000, and then you take a salary for yourself. You process payroll, and you pay yourself $70,000, right? That $70,000, you're going to issue yourself a W-2. You're going to have to pay the employer portion of Social Security and Medicare, and as an employee, you're getting that withheld. But then that $30,000, that difference between $100,000 and the payroll, that $30,000 is not subject to self-employment tax. And that's where an S Corp comes into play, and that's where it can be tax advantageous. So again, using loose numbers, 15% of $30,000 will get you a tax savings of $4,500. And that's where an S Corp comes into play. The other side of this, again, is reasonable compensation. You can't form an S corporation. You have $100,000 in net income. You take $20,000 in salary. That's total BS. The IRS would not stand for that. That would be flagged. You would get audited, and they would force you to pay more taxes. So what reasonable compensation comes into play is how much money are you earning, and how much would you pay someone to do your job? For me, a good rule of thumb is if you're the business owner, you're the CEO, and you have an employee, you have to make more than your employee. So I actually had a client of mine who wasn't, and then I had them pump their salary up by $20,000 for that reason. But again, taking profit into consideration as well as employees into consideration, what would your reasonable salary be? Again, that's not something that I can answer in a lecture. That would be something on a case-by-case basis, you know? But again, that is the tax play with an S corporation. The tax play is you pay yourself a salary, and whatever net income is left over after that salary, you do not have to pay self-employment taxes on. That's the key.
And then you get to take all those deductions, so you don't really have to pay a lot of taxes after all.
Yeah, well, I would even argue that $100,000 I'm talking about is after your deductions. So because what you wouldn't want to do is you have $100,000, take $70,000 out, and then you have $30,000 of deductions. So then there's no tax savings because there's no income left over. You know what I mean? So when I was talking about $100,000, I meant $100,000 of profit before owner salary. That's the key. Yeah.
Does everybody understand the difference between net and gross? Yes, good. Any other questions? That was really good.
I do have like two more maybe simpler questions. I guess with if your partner in business is your spouse, does that kind of change? Is that more of like a talk to your CPA on filing?
Yeah, I would argue don't like again, unless there's a real reason you want to have your partner, formally own a piece of the company. Um, Not doing it that way enables you not to have to file a business tax return, which is not saying expensive, but it costs money. You're not going to get a tax savings by making your spouse a partner. All you're going to do is force the fact that you went from being a solo owner and putting under Schedule C to having to file an entirely separate business tax return.
Okay.
Yep.
And then I guess we were kind of talking about write-offs a second ago. If you're like my even my herbal products business is out of my house, is there rent that's partially deductible from taxes? And how
So
much do you decide?
yeah, so there's something called a home office deduction. The key here, though, is it has to be a dedicated workspace exclusively for your business. So if you're working out of a second bedroom or something like that, and then it's not necessarily going to be a true home office. Or if you work off the kitchen table or something like that. Now, if you converted one of your rooms into, your kind of fulfillment center for your herbal products, and that's all you do in that room, what you would do is you would be able, especially if you rent, you would be able to just say, okay, what's the square footage of this room? What's the square footage of my apartment or house that I'm renting? And you can prorate the rent.
Okay.
Same thing with utilities. But the key there is it has to be a true dedicated workspace. It cannot be used for anything else. So again, some people may work off of their kitchen table. Some people may work off of their guest bedroom, which has all this other stuff in it. So it really has to be a dedicated office space, dedicated workspace.
Thank you. Thank you so much.
Yeah, no problem.
Thanks. I think we have one more question.
Hey, what's going on, man?
Good to see you. I got a question here. How much should we anticipate spending to use a CPA to do taxes? And if we want to try and do our taxes ourselves, what's a good place to start and what are some common beginner mistakes?
Okay, so firstly, I like to tell any potential clients of mine, you are all snowflakes. You're all special and unique. So your tax expense and your tax situation is going to be like no one else's. I mean, again, some people just have a W-2. In that case, it's going to be either like if you go to like you could do it online very cheaply for yourself. But again, I have clients that I do tax returns for $200, and I have clients I do tax returns for like I think my biggest client pays me like $8,000 for their taxes. I have clients that pay me like $20,000 to do other stuff, you know. So when it comes to filing your personal tax return, it's all unique, it's all special. So again, and also depends on the type of service you want. You know, if you just want someone to be a just plug in information and you don't want any advice or anything like that, go to H&R Block. You know what I mean? Like I have clients of mine that I've even said, hey, listen, I'm happy to do it for you, but for what I'm going to charge you and what you're going to get, I mean, you'll get the same service at H&R Block. It's just that, I answer my phone. So really it's what do you want? Do you want someone that's going to be able to actually talk to you? In which case you may have to just pay for consulting sessions and not actually tax return prep. So that's my answer to that. Again, it runs the gambit. If you guys have just a W-2, I'd recommend doing it yourself because that is like very basic data entry information, that kind of stuff. Regarding self-filing, I mean, honestly, I don't really know because I don't do that, obviously, but I mean, H&R Block does self-filing, TurboTax is self-filing, There's plenty. I mean, I use Intuit for my practice, which is and TurboTax is an Intuit product. So I think they have quality products. So if you guys were to choose to file yourself, I think TurboTax is a good way to go. Um, but yeah, and from common mistakes and pitfalls, firstly, just double check the numbers and make sure you're inputting them right. Make sure you don't fat finger something. For example, it should be 14,000 and you accidentally do 1,400, or you do 140,000, you accidentally add or subtract a zero from it. So really, it's double check yourself. Um, I mean, again, I used to be a solid B student, if not sometimes an A student in college. And what grade do you guys need to get an A?
Maybe, yeah. About a 90.
90?
They need a 75 to pass.
Is it, oh, this is a pass fail class?
Yes.
Okay, even simpler then. So you need a 75% to pass. Well, in a role of accounting, you need 100%. So again, for me in college, I would make mistakes, careless mistakes, but I'd still get an A because, oh, we're not gonna like I would get all the way to the end of solving a problem and it was just I forgot to carry the one or something like that, or very in a world of taxes and accounting, you have to be 100% correct. So learning to double check your work, double check your inputs, that kind of stuff. That's the first piece. The second piece, and this has been more so recently with the COVID stimulus package. Make sure you are properly reporting your stimulus payments. I had a lot of clients last year that told me they did not receive any stimulus checks. And so when we filed the return, they were entitled for a bigger refund because you could get your stimulus checks on the back end. Lo and behold, they would get notices from the IRS going, your refund is going to be smaller because you received your stimulus checks. Again, they were saying they didn't receive it. Maybe they did, maybe they didn't, but the IRS marked them as having received it. So for you guys, you would have received your third stimulus check, I believe sometime in January of 2021. So just be aware of that. Okay? Because if you didn't receive it, you're entitled to it. But if you did receive it, make sure you say that you received it. Otherwise, it's firstly going to delay your tax return giving you your refund in general. And secondly, it's going to give you a smaller refund.
All right. Well, I can't tell you how much we appreciate you being here with us today. Thank you so much. We had some really good questions.
Yeah, you guys were great. This was I'm very happy you guys came at me with some really good questions.
Hopefully we have good questions Thursday night as well.
Exactly.
All right. Well, thank you so much. I will send you a copy of the recording for yourself as well. Let me stop the video. There we go. Okay, and I will be sure to get that to you. Oh, that's the wrong thing. I stopped the wrong video.
Yeah, I think you're still recording. You just stopped.
There we
I
go.
can't see all your beautiful faces.
There it
anymore.
is. Okay.